Hello class, this is an introduction to QuickBooks Online. We are setting up a new QuickBooks company and we are going to name it Sample Company for class. How's that? Alright, and we're not going to worry about anything else here. We're just going to keep on going. Alright, and here is the home page for the QuickBooks, okay? And the first thing you want to do is you want to set up your chart of accounts. So you can go to Settings, right here, and you want to go to Chart of Accounts, right here, okay? Now this is the chart of accounts that you're going to need, okay? And you can add to the chart of accounts by hitting New and then selecting the account you want to add. Say for instance we're going to add an expense account for say supplies and materials. We save it and now supplies and materials has been added. Okay, so supplies and materials. So in this chart of accounts I've got balance sheet accounts at the top with cash, AR, prepaid expenses, accumulated depreciation, buildings, furniture, land, and then I've got my liability accounts, accounts payable, other current liabilities, notes payable, and then I have equity accounts with opening balance of equity, retained earnings, and then I have my income accounts, sales income, service income. Then I have my cost of goods sold, and now I've got my expenses, okay? And that's what the chart of accounts looks like in QuickBooks, okay? Now, let's say we want to book a journal entry because we are learning how to book journal entries in this course, okay? So, today's date's fine, and journal entry number 1, and we are going to buy a car or equipment, and so we're going to buy the equipment. Say furniture and fixtures. We'll do that. Furniture and fixtures, and we're going to buy it for $10,000. So we debit the furniture and fixtures for $10,000. Okay, I'm going to say buy furniture and fixtures for new office. How's that? Okay. And then, so we have a debit. Now we have to credit something, all right, because it's got a balance. So where did that come from? Okay. Well, we can do, so let's say we're going to put $3,000. We're going to pay it in cash for $3,000. See, QuickBooks automatically put the $10,000 there for the credit. But let's say we only use $3,000. All right, and see the balance, it's not balanced. The debits don't equal the credits, okay? And let's see if I try to save, and it says the following error has occurred. Please balance debits and credits, okay? So QuickBooks will not even let you book a journal entry without balancing the debits and credits. All right, so let's say I do a note payable for the remainder. $7,000. Okay, so now the debits equal the credits. All right, so let's go save. All right, it saves it, and so I booked a journal entry in QuickBooks. And now let's say I want to see the general ledger. So I booked a journal entry. All right, we can close that journal entry, and then this is the chart of accounts, and we've got QuickBooks. I've got a negative $3,000 in cash because I actually didn't have any cash booked there to begin with. I've got $10,000 for the furniture and fixtures, and I got a $7,000 note payable. Okay, and then if we want to run a report, we can go to reports right here, and then we can go to all reports, and we can go to accountant reports, and then we can run a general ledger report. Okay, so this is a general ledger report, and there's our general ledger. All right, we have cash on hand, negative 3,000, and we have furniture and fixtures for 10. We have a note payable for 7. Okay, and that's a general ledger right there. And then that's a great start to understand how to book journal entries in QuickBooks. And we can do this for any journal entry that's out there in our class. We can do this and book the journal entries, okay? And this is just an example of beginning how to use QuickBooks. Now, there are other reports out there that we can run. We don't have any information in our company yet, except for one journal entry, but we can run a trial balance, which is a different type of listing. All right, here's our trial balance. We've got cash on hand, furniture and fixtures, and the note payable. Our debits equal our credits, okay? And then let's say we can run an income statement, say a profit and loss. That's the same as the income statement. Actually, we don't have any income or expenses because we didn't book anything for income and expenses. Okay, well, let's do that right now. Let's say we're going to book journal entry. Let's say we have income. Let's say we did a sale of some inventory or did some service revenue. Let's say we did some service revenue and we got $10,000. No, let's say $25,000. Okay, services rendered. Okay, now where did that, let's say we got paid in cash. So if we got paid in cash, it goes to our cash account. All right, so we earned money and we're booking the cash. So now we save it. All right, now that's journal entry number 2. Let's say we have some expenses. All right, let's say we're going to book some supplies and materials. Say we had to buy some supplies, all right, for $1,500, supply purchase, okay, and then we paid it in cash. So we are debiting the expense account for supplies and materials. We're just going to expense it off, and then we're going to book cash on hand because that's how we're paying for it. Hit save. Okay, journal entry 3 saved. All right, now we can run a report for the profit and loss. All right, now we have income of $25,000 and we have expenses of $1,500, and our net income right now is $23,500. Okay, and then we can run a trial balance. And so we've got cash, furniture and fixtures. We have note payable, services and supply expense, and our debits equal our credits. Okay, it's very important for debits and equal our credits. All right, and then we can run, say, a balance sheet. And here's our balance sheet. We have assets, and we have $20,500 of cash on hand. We have furniture and fixtures of 10. So we have total assets of $30,500. And then we have liabilities of $7,000 for our note payable that we booked for the other part of that furniture and fixture that we bought. And then we have net income of $23,500. So our total liabilities and equity is $30,500. Total assets of $30,500. So we're in balance. So we did all that by booking 3 journal entries. Okay, that's all we did. We have an income statement, a balance sheet, and a trial balance, and everything we need. And that is a good introduction to how the accounting cycle works in QuickBooks. Thank you.